let's get right into the action here. Here's your Bitcoin chart. Bitcoin again continues to flip-flop. We've seen a flush down to the 52,000 range, a bounce back to almost 60,000, and it's just hovering here. So what this is telling us is that investors don't know what's going on here. There's a couple things I want to make you aware of.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. Let's join Gareth in this video about Bitcoin and more.
So number one, Germany accumulated basically, confiscated a bunch of Bitcoin. They are in the process of unloading that. They've already unloaded a bunch, but that is a sell pressure on Bitcoin. As that kind of gets wound down, we might see that pressure alleviate. Maybe, and this is still what I'm thinking, is I still have upside to this level as a likely upside resistance. Now listen, that's only 60, 61, 62,000. It's not a massive move, but in the very least, this test should occur, I think. Now, the one risk to Bitcoin remains risk assets. So if by chance we continue to see the stocks fall, the mega caps fall. Now listen, yesterday the Russell had an amazing move. So we saw rotation of capital. Now remember, and I want to do a quick little note on this. This is really good for education. So you've had the mega caps run and the equal weight S&P and the small caps be left totally behind. I mean, to the point where the Russell hasn't even made a new all-time high since 2021. But what ends up happening is when those things get too overdone and they start to fall, people are not scared. The VIX is still at like 12 or 13. That's really low in terms of the fear index. And so no one's going to pull their money out of the market at this point. If you're long, you're not pulling your money out of the market generally. I mean, there'll be a couple people. But the idea is what they do is they reallocate. They essentially redistribute. So they take some profits there, and now they're pushing them into the small cap and the mid cap zones and the equal weight other names that haven't run. Which, by the way, that brings up Zoom. WBA is an interesting one down in these. There's a lot of good names that are solid that probably are due for a bounce. But remember this, once the VIX right here, all right, VIX, once the VIX gets near 20 or above 20, that's where fear starts to get a little bit more intense. You'll see money being absolutely pulled out of the market. So you're not at that point yet, but I do want to give you the warning of what to look for. VIX gets above 20, watch for money to actually leave the market versus just be redistributed in various levels or areas.
Michael Saylor, co-founder of MicroStrategy, urges the German Bitcoin community and government to hold onto their BTC, highlighting recent large-scale sales. Michael Saylor tweeted, "Du Verkaufst den Bitcoin nicht." Do not sell your Bitcoin, in German, addressing both the German government and the local BTC community. This marks his first German-language warning this week, similar to his past messages during global BTC sell-offs. Over the past 24 days, the German government has sold 50,179 BTC, worth approximately $3.3 billion. Recently, they transferred almost 10,000 BTC to exchanges like Bitstamp and Coinbase, selling off most of it, and currently hold 0 Bitcoin. These BTC were confiscated from the Movie2 website in January. Bitcoin maximalist and Jan3 CEO Samson Moe suggested that Germany, along with MP Jonah Kotar, develop a strategy to reacquire at least 50,000 BTC. This plan aims to position Bitcoin as a reserve currency for the nation.
We're getting a small pullback on gold after a big move up. Really, at this point, I continue to think at some point we're going to be breaking out above this high pivot here, and we should head towards 2,500 on gold. And by the way, we're going to probably go higher than that. That was at start of year when we were at 2,000, I said 2,500 by year end. We could go above that, but right now we'll stick with that, and then I'll talk about it when we get towards 2025. I think I said 2024, but you guys get the idea here. But either way, once we get towards the end of the year, I'll unveil my price target for 2025, and it's going to be a lot higher. Okay, on the next one here, silver real quick as we go through. Silver, interesting on silver. Why is silver interesting today? Well, because notice how gold was only getting a small pullback, only a little small retrace. Silver's getting a full retrace. Why? Well, silver is half what gold is, which is safety play. It's kind of an offset of spending and kind of recklessness by the Fed and by the government. But silver is half of that, right? And it's also industrial. And so I'm watching this closely to see how much the industrial side of silver influences this price of silver over the next few months if we continue to see a slowdown in economic data. So watch that, but silver again pulling back. You have very obvious support right down here. That's right around $29.50. So $29.50 might be a viable opportunity on silver. Next up, let's quickly look at oil here. Oil continues to grind up. It's now coming back to a very important level around 84, right in here. This is going to be a big level. Now, I've been pretty bearish on oil. We got that one little pullback. Now it's retracing. I'm curious to see. I'm still bearish on it because of the macro picture, but I want to see maybe it can break out in the short term. If it does, you're headed to about 87. So 87 would be your upside zone there of resistance. That's that pivot top right there. I still think net, if you talk about where we are in 2025, I still think oil's probably down in the 70s, if not even the 60s or 50s, because of a slowing economy. I know no one's really buying into that at this point. Everyone thinks, oh, it's going to be a magical soft landing, no landing scenario. I don't buy it for 1 second because basically I'm a data person. And I look at the data and the track record of the Federal Reserve and I say, they've never really engineered a soft landing, maybe once in a zillion times, right? In all the time that it's been around. But you have to go with the data. The data shows us that they generally are behind the curve on everything. They were behind the curve on inflation and raising rates. They'll likely be behind the curve when the markets turn down as well. Natural gas today starting to downtick a little bit more. I'm still interested in a buy in this zone right here. That's your key support level. It's the 618 Fibonacci from down here to up here, and it's also a pivot point right here. So again, that confluence of factors gives us that good zone. Lastly, I do want to talk about the dollar yen here, guys. The dollar yen yesterday got a big drop. Look at the drop on the dollar yen here. Let me erase this so we can go to that chart. Look at that drop yesterday. Very similar to when Japan intervened. This happened to come when that CPI data came out. There's speculation. Check out this speculation that I'm hearing, is that Japan timed their intervention with that data to make it look like the CPI was the cause of the dollar weakening and then the yen kind of strengthening. This shows you that the dollar weakened and the yen actually strengthened. They timed it at the same time because they don't want to be labeled a currency manipulator. Unconfirmed. I want to be clear. It's unconfirmed, but kind of looks like something big there happened at the same time as the CPI hit yesterday. So we'll see here. By the way, major trend line, if you break below here and confirm, this could fall much more. It means the dollar actually would be weakening against the yen significantly.
Solana's native token, SOL, struggles to stay above $145, despite strong network fundamentals indicating a potential rally to $160. Since July 3, SOL has been unable to close above $145, underperforming other cryptocurrencies. It fell 7.8% compared to BNB's 6.5% and Ethereum's 6.5% declines during the same period. Decreased investor interest in cryptocurrencies has caused a 5% drop in the sector's market capitalization over 9 days. Traders are concerned that SOL's bearish trend will persist, even if the broader market recovers. Despite price struggles, Solana's on-chain metrics and SOL's derivatives indicate no signs of stress. This suggests a possible price reversal, potentially reaching $160. Solana's TVL matched the BNB chain for the first time on July 5. Solana now competes closely with BNB chain for second place in deposits. Key highlights include Liquid staking Geo with $1.6 billion in deposits, Marinade with $1.1 billion, and Camino also nearing $1.1 billion in TVL. Solana's dApp activity improved over the past 7 days, gaining 19% in users and a 12% increase in volumes, totaling $703 million. In contrast, Ethereum and BNB chain saw declines in both users and volumes. Solana's decentralized exchange, Radium, saw a 39% increase in active addresses, totaling 1.71 million. Amid reports of the German government selling Bitcoin, other entities, like Genesis Trading, have also been offloading large amounts, impacting the broader crypto market. The German government is running out of Bitcoin to sell. If you've been with us so far, a big thank you. Don't forget to subscribe for free to Bitcoin Zella for your daily news. The link is waiting below. That's all for today's crypto news. Stick around for more updates, insights, and analysis on cryptocurrencies. Share your thoughts in the comments, like this video, and subscribe for more exciting content.